Hey, it's Rav. Welcome to the Everyday Investor TV show, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us all grow our money. You see, the challenge often is that we take our time, we go to work, and if we have a job, we are blessed. We get a paycheck in order to eat. Let me say that again. We take our time, we go to work, we make money so that we can provide. Now imagine a life where money could make you money so that you could take your time, use it for still working, but you could also spend it with family, friends, engage with into a purpose that's greater than yourself. That's why the Everyday Investor TV show exists. Each week we bring in an everyday investor that teaches us a different strategy. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment? You should already know what you are comfortable with, because if it's too low for you, now you can pass and you can enjoy another conversation talking about the Raptors or the Leafs or the Jays or whatever else you want to do. But always ask, what's the return on investment? Number 2, when do I get that return along with the money that I put in? Because if somebody says return on investment is 20%, but it's over 5 years, then really you're only making 4% annualized. So you want to make sure that you're asking, when do I get that investment? 3, what is the minimum investment amount needed? And 4, very important, you look at them in their beautiful little brown, blue, green eyes, and you ask them, what is the risk? What is the downside? If they can't answer that, run really fast. Thank you for watching. Don't go anywhere. We've got a great show. Coming up, Serena Holmes teaches us how we can make money investing in our very first property.
So at the time, I took some money from my business, took some money from my home equity line of credit, and then some money from my TFSA. And then I decided to move forward buying my first rental property, which happened to be a short-term rental in Florida.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey, it's Kyle Ford from Canada's Mortgage Choice. Are you a residential real estate investor struggling with cash flow in their portfolio? As we've seen interest rates rise, renewals come up, expenses increase, we're seeing many investors struggling to generate a cash flow on their small multi-real estate portfolio. If you're looking for help on this and a portfolio review, make sure to reach out to me and the team at Canada's Mortgage Choice. We want to sit down with you, holistically look at your real estate portfolio along with other investments, and come up with a plan to debt structure and make sure it's set up in a way to generate the most cash flow for you.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back. Talking to my good friend Serena. Serena, nice to see you.
Hello, nice to see you.
Yes, we met a while back. There was a conference in Quebec, and it was really nice. My wife and I got to go down there, and I spoke a little bit, but it was really nice to meet great people like yourself, and you're doing a lot. What are you up to these days? And kind of, teach the viewers. The whole show, the premise is just everyday people teaching everyday people. And so, you've got your family life, which is the most important thing. But on the side, we can make some great money, investing. But how did you kind of get into this whole game of investing? And now you're helping other people do the same thing. But how did you get started?
Yeah, absolutely. I mean, I think like a lot of homeowners, my priority was just buying my first primary residence. And at the time I had my own business, and several years in, I decided, you know what? I probably need to learn a lot. I've been winging it for the first 8 years, and I found my first business coach, and she said, you know what, like most businesses only operate on 3 months, and you have like a year and a half in the bank. Like, what are you doing? And I always looked at it like, I can cover payroll, I can cover this, I can cover that. I just never thought about using it. And she really encouraged me to start investing it, and knowing how cautious I was, she advised me maybe keep 6 months instead of 3 months so that you can cover different projects and things coming in. But she encouraged me to invest it in some way. So at the time, I took some money from my business, took some money from my home equity line of credit, and then some money from my TFSA. And then I decided to move forward buying my first rental property, which happened to be a short-term rental in Florida.
In Florida?
In Florida.
But you live,
The dollar was par. I mean, I had to.
You're where? You're in Pickering right now.
I'm in Pickering. I do have family in Fort Myers that have been down there for many years. And like I said, the dollar was par, which in my whole life, this is probably the only time that the dollar had been par. So I looked at it from the perspective that, of course, it's not going to stay par probably for long. So that was part of my play. And I could also buy it for cash with all the resources that I had. So I wasn't depending on a borrower or a lender. I didn't have to go to the bank and get a mortgage. I knew I could kind of piece things together on my own that way. And I bought a 2-bedroom condo, basically overlooking a big lake at a golf course and country club.
Wow. And what was the purchase price on that?
$127,000.
Wow.
So what could you buy here?
Yeah, $130,000. Yeah. And then do you refinance, or you just paid for it and now you're just enjoying cash on cash return?
Yeah, so I mean, I was still borrowing money from my business, borrowing money from my home equity line of credit. So what I did was just reduce my pay for my business a little bit. Every year I'd take a bit of a bonus and put a lump sum towards the money that I owed, and basically paid it off in about 4 years. So during that time, obviously I was renting it to snowbirds and different people coming down. Had to go down and check up on it ourselves, but basically kept it for 4 years. And during that time, basically doubled the money when I sold it, and used that to basically pay off my mortgage and my primary residence. So my goal is Freedom 35. I was off by 3 months, but that was really my goal.
That's fantastic. And your husband, he's a firefighter?
He is, yeah.
So does he do, when he's not working, because I know it's kind of a week on, week off or something like that.
Yeah.
Is he in the game as well? Does he a handyman? Does he help with renos? What does he do? Or does he just
so he's
play golf?
super helpful. I mean, I try not to overload him with anything, but there are times, like even with listings that I have now, or with, in that instance in Florida, there was work that needed to be done. He's super handy. So he helps me out when I need it, but I try not to overload him too much.
Yeah. And you're a realtor as well. You do your own deals, but you also help other people do theirs as well. And so that's why, when we're thinking about a topic, because I know you lend money, you have properties, you had your business, but you're also helping people buy their very first investment property. You and I both know that once you understand it and you do your very first one, I mean, it's amazing, right? The power of leverage. And after the break, we'll take a look at a few numbers. But why do you think, Serena, more people are not investing in real estate, buying a property? Do you think it's because of, all of the fear mongering out there and, bad tenants and all that? Where's the block? What would you say?
Yeah, I mean, speaking for myself, and I think this could ring true for many people, I think in Ontario, it's very difficult to find an opportunity where you're actually going to cash flow. You could even be in a negative, depending on what you're looking to rent for. So I think there's one part of the equation is a possibility of, can I actually make money doing this close to home? So for me, I was looking not close to home for that exact reason. I was like, what can I buy for what I can qualify for here? It just didn't seem like it added up. So started in Florida, made my way out to Edmonton for my next property. Now I'm looking in Arizona. So like literally everywhere but Ontario. So it doesn't mean there's no opportunities, but I just reconciled myself to the fact that maybe there could be better things that aren't close to home. You have to have the right team in place to do so. But I would just say, don't be attached to, I've got to be able to be in driving distance or something like that. And I guess the other part of the equation, really, when it comes down to it, is the LTB. Like I have a client right now, she wants to sell her primary residence and she can't because she tenanted part of it. So I think you have to be very, very careful, just understanding that there are certain laws in place that do protect the tenants here. And you might maybe find something better in Alberta where the laws tend to skew a little bit more in favor of the landlord. So just be mindful of the laws no matter where you go.
So wait. So LTB, landlord-tenant board, you're saying you have a friend who has their own home and they've rented out the basement or something. She wants to sell, but she can't get rid of the tenant.
That's right. Yeah. So she's had to wait 8 or 9 months to basically try to get in with the LTB. Our meeting is actually finally on Monday. And basically the only way that she can potentially get them out is to say she needs it for her own use or for family to basically move in if they're willing to accept that. And then technically you're supposed to keep that property like that for at least a year. And if she was found to be selling it during that time, there's very big financial consequences.
Wow, that's crazy.
Yeah, so not to scare anyone, you just want to be aware of the laws wherever you are.
Yeah. Oh, and you want to talk to people like you that are, you're part of mastermind groups, you're being coached, you are coaching. I mean, you have to do your due diligence, right? And you have to be able to work with people, like you say, a team. People are afraid to spend money to invest money. So for example, it costs money for you to invest in Edmonton before you knew that was the place. You want to go to Arizona. You have to be able to. I have a friend, Anil. He spent about $50,000 traveling all over North America before he found his place in Kissimmee, right? In Kissimmee, Florida, just beside Disney. And now he has over 100 properties there, but he spent $40,000 to $50,000 traveling, building a team, so on and so forth. But now he has over 100 properties. And so we have to spend money on education, I guess is what I'm saying.
Yeah, and I think when it comes to short-term rentals, something to be aware of is that, no one expected COVID to happen, right? So I think whatever property you buy, you also want to look at it from the perspective that you want to be able to cover the mortgage and expenses if all of a sudden you couldn't get short-term rental rates. So whether that means finding insurance companies to place people that have been displaced with a, fire, flood, or hurricane like they had last fall. So you just want to be careful and run those numbers appropriately, because some people that did have those executive short-term rentals had to sell during the pandemic because they couldn't cover their expenses when they stopped booking consistently.
Yeah. And so, Serena, we got a virgin investor. They want to get into this. What do you say to them? What's our first steps, right? There's somebody that's watching this, they're contacting you and they're saying, I want to make, and we'll look at it, but we're making north of 20% returns annualized when you just buy a simple property, when you calculate, how much it goes up, how much someone's paying down your mortgage. And that's not even necessarily counting cash flow, the difference between your expenses and your income, but you're looking at 20-25% returns. Somebody wants to get involved in that. How do they start? What do they do? And let's say it's where you're at. Let's say it's out in Durham or, Bowmanville or Peterborough or something like that. How do they start?
Yeah, I think obviously connecting with a realtor would be the first step, just because you want to talk to people that understand the market. But for me, even looking in other markets, I had 3 different realtors working for me last spring. So I was looking at deals in many different places just to see what the numbers look like and try to understand the laws and stuff like that. I think it's important to try to connect with people that are in the investment community as well. And you may not necessarily want to start with a single family property. It's a lot harder to qualify for something that's under 6 doors. So depending on how much money you have to put to use, you could potentially even consider something from a multifamily perspective, because you're looking at the building's income, not necessarily your personal income, to qualify. So there could be different things that you want to consider. And depending on the style of rental you want, like a long-term tenant's great in the sense that once they're in place, you're not constantly trying to book them. But maybe you could look at a student rental because you don't have to worry about rent caps. Or maybe you want to look at a short-term rental or a mid-term rental. So it just depends on what your objectives are. If you want something that has cash flow, then you might want to look outside of the immediate GTA. And if you just want that long-term appreciation, then this could actually be a great market for you.
I have a good friend. He's actually a partner of the show, Kyle Ford, and he talks about just lending money. And I know that you're a big fan of lending money. Talk a little bit about that for a second. How to make money lending money.
How much time do you have? Yeah, I mean, that was a concept introduced to me about 4.5 years ago. And, it saved me during COVID. My business couldn't operate anymore because we were in events. And I realized I could take money from my line of credit at 3% in the good old days and loan it out at, 14, 15, 16, 18, 20+%. And then I'm making the difference. And the interest on the line of credit is tax deductible. But, by accessing the equity in my home, because again, I paid my mortgage off back with that condo many years ago. So I have all this equity that I can put to use. And, it pretty much supports my lifestyle in many ways.
And even today, I mean, we'll take a quick break here, but even today, if you're borrowing at 5-6%, and you're, lending out at, 12, 13, 14%, it's 100 grand, you're still making $6,000, $7,000 a year. It pays for a trip to Mexico, so, no, this is great stuff. So let's take a quick break. When we come back, we're going to be talking about Serena. We'll just look at a few numbers of how you can make money investing in real estate, especially you, for your first property. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey, what's going on? This is Kyle here from Kyle Ford Mortgages. On today with my better half, Chelsea. We have a very exciting announcement. You've asked, we've delivered.
We have a really exciting event, so mark your calendars, June 9th to 12th. We have networking, mastermind, some awesome content. We have a pool party, a beach party, a black tie gala. We've got it all, and you can rent your very own cottage or have an awesome room at the Kiwi Motel.
If you're looking for all things real estate, whether it's short-term rentals, long-term rentals, private lending, creative financing, whatever it may be, not only great content, but great people, good times. You absolutely do not want to miss this. Make sure you check out the link.
Hi everyone at Everyday Investor, Costas Cavellos here, and I got a fantastic opportunity for you. There's so many projects being sold in the GTA, it's hard to pick the right one. But if I told you I could get you a project right next to the lake and surrounded by golf courses, wouldn't that spark an interest? What if I also added it's located right in beautiful South Mississauga? Sparked your interest, didn't I? Reach out to firstaccesscondos.com and we'll give you the insider information to Exhale Condos.
Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to my good friend Serena. She's teaching us how to make money investing in real estate, especially your very first property. Serena, thanks for being on the show. The very first thing you said is make sure you connect yourself with a realtor, and probably, I know this is probably not fair to say, Serena, but because everybody needs to be able to have a start. But I like to make sure my lawyer, my accountant, my realtor, my whole team, that they're investors as well. It's just important to me because things change so much that you want to make sure you're working with a realtor that understands the investment world as opposed to just buying and selling. I know that's not the fairest thing to say because everyone needs to start somewhere, but what are your thoughts on that?
Yeah, I mean, I would agree completely. Even with my accountant, I do things that are maybe a little untraditional because I am involved in investing and lending and things like that. So I think it's important to work with them so that they can set you up properly for success. You don't want to necessarily be paying more from a tax perspective, or there could be different strategies you take advantage of that if they're investor focused, they'll be a little bit more in tune with.
No, absolutely. Okay, let's look at some numbers, just hypothetical of, because again, sometimes the biggest mistake I make sometimes is just to assume people know what I know. And it's not because I'm smart, it's because I got kicked out of 4 high schools in Kingston, Ontario. They put me with a co-op. Remember, in high school there was a co-op program, and it happened to be the largest real estate brokerage in Kingston, Ontario, and I was 16. And so now I'm 51. I've been in the game for 35 years, and sometimes I feel like people know what I know, and I forget. No, we've got to kind of bring it back to the basics, teach leverage, teach how you can make north of 20% annualized returns. So walk us through that a little bit, Serena. So just a hypothetical, round kind of numbers. I don't know. Today we're probably buying a property for $500,000. Where can I buy a property for $500,000 today out by where you are? Give me a city.
Yeah, I mean, so I'm in Durham region. I mean, if you go all the way out, maybe Curtis, you might find something there. Otherwise, there are deals more in the Hamilton area, Niagara, and things like that.
Okay, let's say Curtis, just to see, because that's where you are. We buy it for $500K. how do I make money on this? So first of all, I'm not taking $500,000 out of my pocket to buy this, unlike Florida when it was $130,000. What am I doing here as an investment property in Curtis?
Yeah, so I mean, you're going to need at least 20% down since you're not living in the property potentially yourself. I mean, I guess you could house hack and live in part of it.
Okay.
But if you are buying it strictly as an investment property, you'll need 20% down.
Okay, $100,000.
And then ideally to cash flow, you're probably going to want to find something that either right now has a possibility to rent upstairs and down.
Okay.
And if it's not set up to rent down, that you put in the work to make that something that you can rent down as well.
Okay, so to cash flow, you're saying get 2 rents for I always say 2 rents for 1 furnace. So if I could get 2 tenants, then I can make some money on cash flow. But let's not even put a number to the cash flow. And again, we don't want to assume anything. What is cash flow? What does it mean? Define that.
Yeah, I mean, what I can use even as an example is that I bought my long-term property in Edmonton. It was just slightly over 500, so it was about 524.9. And same thing, I rented upstairs and down. So in total, I got about 3,300 up and down. I think that's probably a little bit higher now. Maybe you could get 3,800. A portion of the utilities were included, so they were capped at $500 a month. And then anything that they exceeded, they would have to split 70% up and 30% down. So sometimes I did have to recover a little bit extra depending on what that was. It was only maybe cash flowing, after paying property management, because I did have a company local in Edmonton that took care of it. Cash flowing maybe a few $100s a month. But really the long-term value was how much the market appreciated during the time that I owned it. So I owned it for 3.5 years and it went up from 525 to 615. So it went up about 100,000, close to 100,000 during that time.
So when somebody asks you, you're sitting around having dinner with your family and friends in the neighborhood, and you say you could buy something in Curtis for about 500,000, and they say, okay, Serena, what percent is a very conservative number for it to go up in a year? What would you say this property could go up in a year? What percentage-wise?
Yeah, I mean, I think inflation, obviously, it goes up and down. We were seeing close to 30% during the pandemic. Like it was going up 25, 30%. I would say conservatively, you could say 15 to 20% annualized. And then obviously, I would think so. Yeah.
Wow. Okay, so no, that's great, and I know that's done that. Let's just be ridiculous. Allow me to be ridiculous for a second, and let's just say even 5%. So 5% on 500K is 25K, right? In 1 year. And I'm only invested in for $100,000. So basically, I'm making 25% just on the inflation. I didn't put a number in for cash flow. And the biggest part is somebody paying down our mortgage, right? These 2 tenants, they're paying down our mortgage, and that's the meat. That's the meal right there. This is kind of gravy and dessert. And so, yeah, no, I mean, and this is what, Serena, this is what I want to be on a mission to be able to teach people. You don't have to do this. You don't have to be an active investor, but imagine if you did, you're making north of 25, 30% a year, and I'm using a ridiculous number. Let me ask you this, Serena, because I don't think I ever have. As an investor, as you're doing this, would you allow Rav to be on title, put up the 100 grand, you take care of it all so I can be fully passive, and then we split the profits?
Yeah, I mean, I think that's a strategy that a lot of people should consider. If they have no money to get started, they can find the property and manage it and get someone else to qualify and put up the capital, and then you're making 50% on that property. I know people that have literally done hundreds of deals that way with none of their own money. So it could be a very lucrative strategy for you if you're starting out, and you don't have that money.
Find somebody, yeah. So what you're saying is, just on the inflation, it's 25%. If I include mortgage and cash flow, it's, let's just say it's going to be annualized, we're looking at 30%. If Rav doesn't want to do anything, then Rav can enjoy 15%, and Serena is doing the work, and she's enjoying 15%. I mean, that's still fantastic. Serena's not using any of her own money, making 15%, 15,000 even on the 100. And I'm using my money, but I'm doing nothing, and I'm making 15,000. So that's another strategy. If people, come together, there's somebody that doesn't have money, but they've been taking courses, they've been learning from people like you. They'll do the work. Rav puts in the money, and you have a joint venture relationship.
Yeah, I mean, you have an appreciating asset, and I think it's also important to understand that if you took that same money and dumped it in the stock market, not only is there nothing tangible with the stock market, so I personally don't love it myself, but you're only making a percentage on what you put in. So in this case, you're putting 100,000 in, you're making that percentage on 500,000 on an appreciating asset, not just 20% on 100. And then as that appreciation and the equity grows, you can refinance, take some of that money out, and do it again and do it again. So I think it's important for people to understand how effective and how powerful that can be in terms of building your long-term financial future.
Yeah. So, Serena, you have a beautiful baby girl, Sienna. What's her name?
Yes. Yeah, Sienna.
Sienna. And she's what, 3, 2, 3, 4?
She's 3, yeah.
She's 3. This comes with some stress. I mean, you've got to be with like-minded people. You were at an event last night. You're going to an event tomorrow. You're with other investors because it's good to be in the same kind of network. This comes with some stress. Is this something that you're going to teach your daughter? Is this something that you would love for her to do, but then help her to mitigate, the times when there's turbulence? I mean, what are your thoughts? Kind of give us the maternal mindset if there's people like my son who's 22 years old, my daughter who's 20. What would you say to them? Hey, your dad's doing it. How come you don't do it? Like, what would you say to them?
Yeah, I mean, it's not for everyone. I think it's important to understand that, really how can benefit your life is the best thing I can say. Like, I wouldn't be where I am if I hadn't started investing when I did. That being said, it's not always stressful. Like, if you hire a property management company, like my property in Edmonton, I never saw the home. I never went out there. Anytime there was an issue, like maybe I learned about it. It was maybe only if there was like something that had to get replaced, if I knew there was a cost, but they fielded any of the questions from the tenants. So it really depends on how you want to approach it, right? Like, you don't have to be the one there changing shower heads and mowing the grass, you know what I mean? So I think it just depends on your approach and how actively you want to be involved, right? And opposite to that, if you have the money, maybe you find the joint venture partner that deals with all of this stuff, right? So it doesn't necessarily mean it has to fall all on your shoulders.
Yeah, no, I agree. If you have the right team, and I guess more what I was saying is, we have friends that have 50, 100, 200, or, doors, and they have big apartment buildings, and there's no right investment. The right investment is what's right for you and what allows you to sleep at night. Like, me, I did a lot of all that stuff. Now I'm purely passive. I don't have my money in stocks per se. Stock options, which is a little bit different. Land development, where I just write a check and partner with a developer. And because I just want to be very, very passive and be able to enjoy my community and be able to do other things. And then there's people that, no, they're in a stage of life where they want to be busy, they want to be active, they want to see if they can flip a house per se, or buy multifamily 50 units, that kind of stuff. So when people ask me what's the best investment out there, I would say it just depends on what you're looking for.
Yeah.
What
yeah,
is
there's
next?
time and there's money, right?
Exactly.
So it just depends on what you're willing to compromise on.
Exactly. So what's next for Serena? What are you looking to do now?
Yeah, right now I'm exploring multifamily. So I think that's something that seems attractive to me, again, because you don't have to personally guarantee it. The building really speaks for itself. So I've got some money I'd like to deploy later on this year. And then I'm also entertaining some short-term rentals in Arizona.
Nice. Serena, thank you so much for being on the show. Time flies when you're being nurtured, so I really appreciate your time. If those that are interested, just to pick your brain and call you, your information is there on the screen. Do you mind if they reach out?
Yeah, no, absolutely. Please.
Okay,
I love helping people.
Well, thank you. I know you do, and that's why I wanted you on the show. Thank you so much for being on with me.
Great. Thank you.
Yes. And thank you guys for watching. Without you, we would not have a show. Make sure you go to our website, everydayinvestor.com. You can watch this show or any others. It's like being on demand. Please subscribe to our YouTube channel. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. God bless everyone.